Hi guys! If you want to know some quick and smart strategies used for the best investors in the market, don't worry, we'll describe them for you. Of course, we aren't financial advisors and you shouldn't make any investment moves based on only this video. Our goal here is to give you one of the best contents on YouTube to improve your own research and give some ideas of which kind of subject you should look for. That's why we brought 4 strategies that we use in our own investments. Some of them are quite easy and don't require much money, time, or effort. The last one is a strategy that Sherlock Holmes probably would prefer to use, and we'll explain why, don't worry. But before we talk about them, don't forget to subscribe to this channel and turn on post notifications. Also remember to check our gifts and bonuses in description to invest in cryptocurrencies with the best market conditions. Now let's begin. Number 1. Buying the dip. A basic investment strategy is known as buy the dips. Of course, it doesn't mean go all in while an asset's price is going down, but it means average in as the price goes down and buy after it settles. To make it easier for understanding, here are some specific ways which it works. Buy as the price goes down, creating an average position and aiming to buy more as the price decreases further. Wait until the price settles or even shows signs of recovering. Then you buy at a point when you see a reaction off of support. Buy orders at lower prices and let them get to setting buys just before historic support levels. In other words, wait until the prices get close to their lowest historical low. This strategy is much safer to use in a bull market or a stagnant market, where the general trend is up or sideways, rather than use it in a market where the general trend is down. In regular time, prices can recover within the same day or within a day or two of the correction and can give you an amazing return over investment in just a couple days. That's why you can always set a limit order for specific prices on dips. But if you don't feel comfortable leaving orders up based on market metrics and you just want to do it by yourself, CoinMarketCap has an app that allows you to set notifications when coins hit certain price points. So you'll get notifications when these prices hit a certain value, you know that you settled to buy it. In any case, to follow this tip, you need to understand the chart prices and always pay attention to support levels. So if you already know how to do it, then you're ready to design your strategy. Number 2. Shorting crypto. Short selling or shorting in short is an investment method used when you expect an asset's price to drop. A good example to simplify the subject: you can sell off your bitcoins at a favorable price, then buy back your satoshis when the price falls. Of course, this strategy has some risks, like if the price shoots up, you stand to lose the part of your crypto invested in the process. Anyone can short sell crypto. People who buy and sell crypto can short their holdings directly, although not all investors subscribe to this strategy. Opening a short position does not imply a short-term deal. When an investor goes short, they borrow crypto to sell at the current market price. When the value of the asset drops, the investor buys the assets at lower prices, repaying the crypto borrowed and making a profit of the difference. Now, when you do a long order, it essentially means buying crypto with the expectation that its market value will rise. Opening a long position of a Bitcoin and Tether pair, buying just when you think the time is ripe, and selling when the price of Bitcoin over to Tether grows. All Trading Blog provides us a good example of how this can be done on Binance. Let's suppose you're interested in shorting Bitcoin on another cryptocurrency on Binance. The first choice is to do it on Binance's margin trading platform. Then all you need to do is, number 1, if you haven't already, open a margin account. Number 2, then navigate to Binance margin trading. Number 3, navigate to the market pair of your choice, such as Bitcoin and Tether or Bitcoin and Cardano. Just examples, right? You can do it with every crypto you want. So finally, with Binance margin trading, you can borrow funds for leverage trading. Number 3, buying altcoins with prices floors. This is similar to buying the dip, but with a more specific context. All coins, being so volatile as they are, have potential for deeper dips, but this enables a higher upside as well and slightly less risk in certain situations. And when these coins are nearing the price floor, you have a chance to invest into them. Maybe you're wondering, alright, and when can I know what the price floor is? The answer is, you can never know exact. However, you can get this sense of a price floor either by following a crypto for a while or checking where the price action goes at the charts. You also need to pay attention to support levels for the price. This is not a certain thing as an exact science, but it gives you at least a starting starting point to go off of. This strategy works to make you able to buy a promising project at a really deep price without it having much downside potential. At this point, we recommend you to invest in projects that are actually solving real-world issues, that have money behind them, meaning if they solve those problems, they're going to make a ton of money in returns over your investment. Some good examples are Algorand, Cardano, Avalanche, Polygon, Phantom, Harmony, Terra, and much more. And we strongly recommend you to do your research during the Evergrande crisis. Some of these low prices cannot repeat again, so you can buy it in the red days over the course of weeks or even months. If you have the conviction that some projects have a huge potential and you understand the price action, then you can sit and wait for future profits. Number 4, hold. This is the best way to earn money during a crash. After all, crashes don't last forever, and it's better if you keep your best cryptos with you if you believe in their projects. So if you're confident in your investments, meaning you've actually done the due diligence yourself and your investment plan is long-term, then there really isn't a reason to sell on dips. That's why our team calls this strategy as the Sherlock Holmes strategy for crypto investments. In the tale The Hound of the Baskervilles, Holmes once said, "The world is full of obvious things which nobody by any chance ever observes." Holding cryptos from projects you believe in is so obvious that many just ignore it on the first red day in the market. Some of them get so desperate with the possibility of losing all their money, even when the circumstances show the opposite. Then the first thing they tend to do is to sell every asset they have. But the truth is, you only lose money when you sell. There's nothing wrong or reckless to expect price appreciation over the years, even when the market isn't going so well. So holding during crashes and crises is an obvious tip, but certainly you shouldn't ignore it. Try to be rational and less emotional when things don't go as you planned, because bad days and low prices aren't your fault. Therefore, just remember to observe the obvious thing which nobody else is paying attention to. While getting to the end of this video, I'd like to remind you to don't make any decisions based only on this video. Realize that to put each of these methods into practice, you still need to deepen your research. Our goal here is just giving you an overview and tips on what subjects are worth researching to double your cryptocurrency profits, okay? If you're new here, remember to subscribe to our channel, turn on post notifications, and hit the like button if you have enjoyed this video. Also, check our links in description if you want to invest enjoying the best market conditions. If I were you, I'd never lose the opportunity to enjoy our bonuses, just saying. That's all for today, guys. Thanks for watching this video, and I'll see you in our next one.